Good afternoon, everyone. BC Ridgefield here, coming to you live from London. It has gone 1 minute past 12 here, which makes it just gone 11 a.m. UTC. A big shout out to everybody watching this live and also to everybody that's watching this on recording. I hope you all had an awesome weekend. Obviously, lots of news driving events last week as well, which we kind of took a look at on the channel. But ultimately, as we can see on our screen here, one of the big focuses for us has been around the weekly inside bar pattern that we've been trading, and we can see once again the kind of significance of that. So I'm going to touch upon that today, the trades that we take and the trades that are available to us. But something I wanted to do today was maybe kind of give a little bit more insight on how I'm kind of doing this on a day-to-day basis. So how I'm looking to manage entries, what I'm getting my bias, how I'm getting my bias, and then what I'm looking for in terms of triggers, in hope that that'll be kind of, useful insight into how I kind of build out that side of it. Not just, here are the levels. What do we do at those levels, right? How do we manage when we're heading into those levels, and how do we stay on the right side of probability? But first, big shout out, Bernd, Rick, I saw you were in there from the beginning, mate. That really did make me chuckle. Nitpar as well. Rick, everybody that's joining straight away. Sorry if I've missed you out, but do feel free to say hi in the chat. Also, as well, guys, don't hesitate to ask questions. Yeah, especially on a Monday, right? Wednesday, we try and leave it so that we can review some alts, take a look at some of your guys' setups, get some kind of input on a charting basis. But actually, in terms of this is, I really want this to kind of be a little bit more the education-focused one. And I think Monday's a really good day to do that as well. Whack! Hello, buddy. And Papa Legbar, there he is. Best Sharon, thank you, mate. It's really great to have you guys on there. Lots of awesome patrons. And obviously to anybody that's new as well. If you are new, one thing that I say about a lot of the people that come in and take part in this show is everybody kind of participates, right? There's no noob questions. There's no silly questions. All of us that are taking this journey, or that have been on this journey, or on this constant journey together, will maximize and enhance that by asking questions. So don't feel silly. If there's something you don't know, if there's something you want to know, ask questions and we can cover it. All right. So without kind of jabbering on too much, let me just zoom out to a weekly here, give you guys some context on where we've got this inside bar pattern from and exactly what that is. So I'll just get rid of this little Fibonacci in here. Something I like to do is, when I'm looking at markets, I'm asking myself a couple of different questions, right? And one of those is, what's capping price, right? So what I mean by that is, what's capping the downside, what's capping the upside. Now, to give that kind of a little bit more context, this line here, is really significant for me. And let me tell you as for why. Let me just find our... Pop that away, and let's just pop this off for a second as well, right? Because there's just a couple of levels that I just want to focus on very quickly. Tammy, hey, good to have you. So when I say what's capping the market, I'm looking for a point at which price tried to get beyond, found some strong resistance or support, and then I want to measure that on a higher time frame scale. Okay, so let me just get this full screen, right? And guys, if any of this is going too quickly, or if there's anything you want me to go over again, please do just let me know and I'll stop and make time to really go through it. So my analysis always starts around the same concepts, no matter what time frame it is. So here we want to reach and we want to zoom out. And what am I looking for? So I'm looking for liquidity, right? In terms of that, I mean, when price comes and raids liquidity on one side, and then we ultimately believe it's going to head to the other side, exactly the same as we would do when we're range trading. All right. For me, it keeps everything very simple. I'm looking for market dynamics, how price is moving. But ultimately, from a higher time frame perspective down to a low time frame perspective, the big question I'm asking myself is where's price trying to go? Where's price reaching for? Okay. So to give that some very, very quick context, I'm just going to draw this in using the pen. So forgive me because I know I'm awful with this thing, right? But when price came down, swept this low, for example, now if this was a range, we would consider this a deviation, right? So let's just say, for argument's sake, this is our range, from high to low. The deviation, price steps back in the range, we ultimately target the range higher. Now, when we have an impulse move, when we have a breakout like this, right, what we want to see is price hold a level, and retest this line. So that is currently what we're looking at here. Now, we need to remember this is on a weekly scale, okay, guys? So high time frame perspective. So we're now saying to ourselves, okay, well, what do we know about this? What do we know about this? Let me just clean this up quickly. So one of the first things we want to start with is market structure, right? So we can see very clearly as we're here, we've come from setting lower lows, lower highs, yeah, to a point here where higher high, higher low, higher high. Now the big question is, are we dropping down to create another higher low? In which case we've got a lot of space to come in for here, right? So let's just say something like this, before then ultimately going on to create another higher high. So when it comes to market structure, we need to understand that we want to be trading with the trend, institutional money flow, however you want to look at it. The chances are that if the big players are looking to drive a market in one direction, it makes sense, right, that we want to be riding the same wave as them. We don't want to be riding the opposing wave. So in terms of market structure at the moment, we're bullish. So how would we read this? Now, there's a couple of things that I'm looking for. I want to see price form a base on any time frame, right? Now, whether we're looking at this in regards to, say, the power of three, yeah. So if we were looking at this before this move happened here, right, then we could be looking at this and saying, like, okay, here was our accumulation. What happened? We had the drop, yeah. Price is starting to accumulate. So we have the accumulation, we have the manipulation, and ultimately we then have the expansion, right? So price comes down, it ranges, it compresses, it sends the market in the wrong direction in order to generate enough liquidity. That liquidity then gets bought up on the other side by major players typically who need to fill very large orders, leading to very fast expansion moves that leave a lot of people behind. Ultimately, this is the move that deceives, throws people off course, it triggers algorithms, breakout traders, also takes the stop loss of anybody that's there, meaning that these become a lot of sell orders. So why does the market go up if we're creating a lot of sell orders? Because those sell orders can then be filled by buy orders of larger accounts or players that are willing to kind of position themselves at the ultimate point down there. Now, that's what we would call the power of three, right? An ICT study, I would suggest anybody that really wants to go into depth on that goes to the source, which is ICT, and really thinks about that. Now, what else am I looking for in terms of the formation of this base? Now, again, just want to reiterate that this is something that I will apply to every single time frame, right? But ultimately, we want to start on that higher time frame, zoomed out perspective, yeah, and then build from there. Okay. Crypto 101, yeah, exactly like a CMT lesson, my friend. What a fantastic course that is. So we've come in, we've had our base. Now, I'm looking for order blocks, fair value gaps, breakers, basically at that and untapped highs and lows. Why? Because anywhere where there's an expectation that price is going to react, so where we can predict that there were buyers previously, yeah, and where we can predict that there were sellers before, what signatures can we see that allows us insight into that? Okay, one of them is order blocks, right? So just for example, something like this, right? Whether you're somebody that allows for the wicks or the bodies, again, I would always suggest doing research into it. ICT, Larry Williams. I know there's other people out there with great order block theory as well, or it might also be known to you as supply and demand areas. So for me, what I have a tendency to, how I look at this is if we've got, so this is the last up candle before an impulse move lower. What gives this extra validity is that we have these inefficiencies in here, these fair value gaps. You see where these wicks from the candles either side of this one don't overlap. Basically, our assumption is that the market wants to rebalance this to create an efficient trading environment, okay? Which means that ultimately those areas are quite often targeted. So when we have bearish fair value gaps, yeah, so in our down candles, the principle is that we're looking at these fair value gaps. So let me draw this one in for you here. Yeah, we're looking at these fair value gaps in two ways. One, we're looking that when price comes back in with here, we're retaining our high time frame bias, which in this case is bearish. So we would ultimately then be looking at a middle time frame and then a lower time frame to execute in order to set up short trades in here. Yeah. What would change that assumption, right, is if we came through this, yeah. And again, I like to see how price moves, right? You see, as we're coming into this area, you see these long upside wicks showing that price is trying to gain territory in there, but ultimately it's finding resistance in the form of sellers, right? Meaning that as the price is going up, we're really going down, really going down, okay? So, however, if price really flew through this, yeah, and then came back down to retest it on a lower time frame, what we would want to see is this start to hold, as support. And then our conviction is that price can move higher, first of all, to our internal liquidity, which would be a high in here. Secondly, to our external, right, which is the prior swing high in this case. But we would also be aware of this order block, right? Now, ultimately, price didn't do that. It got rejected here, and then price started to break down. So what we got were our short triggers, okay? Now, once again, see this up candle, same way as we identified this one here, this up candle as our order block. So up candle, move lower, leaving an inefficiency there, okay? This also happened within the fair value gap. So what this allows us to do is say, okay, well, when price got to here, right? And we'll do that in blue to signify that that's an order block. When price got to here and these orders came in, any buyers in here are now offside, right? Meaning that they're trapped. They went long here. If they didn't close their positions or their stop loss weren't tagged, then they're still long here. So if they hold through this, which isn't something I would recommend. Well, no, that's not true. For the way I trade, it isn't. I know there's a lot of different trading styles out there, but for me, I like to really define my risk early. So when price gets held here, once we break down below a certain position, I've got a stop loss in place, that gets triggered. But that's not how all traders trade. People will hold these positions expecting price to revert to the mean, or certainly back to this area. When it does, quite often they'll be happy to cut their position at a minimal loss or at break even, right, in order to then reassess and get back on tone with the trend. That's why very often when we revisit these areas, we see that initial reaction from price, all right? It's also, in a clean way of thinking, it is, okay, look, if this is where the sellers were before, right, and this is something as well that I really like to look for, breakdown from the order block, fair value gap, retest of the order block here, ultimately leading to more downside, Now, as with an order block, as with a fair value gap, we can look for the inverse of this, right? Meaning that if this came down, acted as resistance here, then look how price moved through the level. Do you see what I was talking about earlier? How price cuts through the level. It doesn't offer the resistance, telling us that there's enough selling pressure there. Buyers have stepped in. They've overwhelmed this level, right? We've seen a rejection here because ultimately this is where price is seen as fair value almost, right? Price has gone up to here. If people thought that it was still high value at this, as in it was a good buy, then price you would assume to go up to this and continue to moving higher until it finds some kind of equilibrium. What people are saying is this was a good buy down here. People still see it as value enough to buy here. Ultimately now what's happening in this situation? So when we saw that we had sellers within this order block and price rejected here, see no closers above, when we've reclaimed this, we now want to see this act as support, right? So as we are here and we're doing with an order block, we can do the same with fair value gaps, right? So you see this fair value gap that we had here, resistance here, price sold off. Let's move this forward again. Price found resistance here, ultimately sold off a little bit before reclaiming this. We're now drawing into this, to make this an inverse fair value gap, right? So if we make that purple, we're saying, okay, this was a fair value gap that was acting as resistance. We've now flipped that to support, okay? That's one way, or the main ways that I'm looking for the TA on the market, as well as obviously key levels and ranges. And what we're going to do today is break that down across different time frames so we can do and understand to the current price and what's on today, how we can kind of establish a bias based on that. So let's just take a moment, guys. If you've got any questions, please do pop them in the gap. I can see we've got a few good questions coming already. So let me just take a look at them before we go on too much further. Nipah, was looking at BTC chart last night, not knowing where to go from here. Absolutely. Let's take a look at that today, see if we can come up with some good theories. You have a small horizontal line on there on the wick. Can we call that a deviation? Yeah, so that's a really good question. We're going to look onto that here, and I assume Crypto 101 that you mean this line here, so just mark that a little bit clearer, right? This one here. Now, that for me, and this is what we're going to touch upon in this session as well, is very much about looking at the sweeps of liquidity, right? So if we just look at this, just really, really basic, even if we're just following this cluster of candles here, weekly highs, daily highs, right, are areas that we target for liquidity runs, right? Because they're clean and clear areas that people are trained and educated to place stop losses, right? Meaning that ultimately larger accounts can target these areas if they want to generate liquidity in the other direction. So let's just do a very, very quick study in here and say, okay, we're looking for a reaction every time a previous week's high or low is swept. And in terms of how we trade a range, we're looking for something very similar, right? So, meaning that if we run the range low, deviate, come back within the range, we then target the range high. So, let me give you an example. Let me give you a few examples, right? So, see this low here, yeah? And guys, let me know if any of this is going too quickly or if you can't see the chart okay. But this low here, prior week low, can you all see exactly what happened here? Price came in, tagged this, went up to where? The prior week's high. Yeah? Now, what happens here? We get an inside week. Yeah? Meaning that price goes down here. Craig, hey, buddy. Sorry to hear that, mate. Let me know if you've got any questions on catch up. Always appreciate you dropping in, mate. So we ran that here, came up. Now, this is what we call an inside week. This is what we base our inside bar pattern on. Yeah? Ultimately, this becoming the mother bar. The larger candle here. Let me drag this across so we can give this some current exposure. And then this becomes the inside bar, right? So let me just do those a little bit shorter because we're going to take this off the chart in a minute, but I just want to show you in terms of context, all right? So remember what I said. When we take liquidity on one side of the range or one side of the level that we're looking at, be that a weekly high, a daily high, and we revert back within that, the assumption is that price has failed to achieve acceptance at that level and will therefore drop to the next level where buyers existed previously. Ultimately, what helps that drive is the fact that institutions, smart money as ICC or someone like that would call it, but big accounts. So they're driving that in the same direction. Price knows that it's got buyers or sellers at a certain area. So when there's synergy between those two things, that's where we get our theory. So let's run through that again super, super quickly, right? This low was taken, the prior week's low was taken, price ultimately opened, ran up to the high, came back down. We got our inside week, meaning that price is consolidating. That's what the inside bar pattern leads us to believe, is the fact that the market is waiting to make the next move, right? So we now have a clearly defined range. Our mother bar, which is the high of this candle, the inside bar, which is this candle, upon the close. The theory is, should price deviate the range, come back within, we ultimately look for price to trade to the other side of the range, yeah? So on a larger scale perspective, and apologies because this will look a bit rough on this time frame, deviation, price back in the range, where do we expect it to trade to? The far side of the range, right? Now, yes, there are caveats to that because we include a midline, but we're going to look at the inside bar pattern on the lower time frames a little bit later, but it's showing you that the same theories and principles are correct, whether you're looking at weekly highs and lows, monthly highs and lows, daily highs and lows, right? Again, here, what happens? We get our inside week, price runs the high here, comes back within the range, targets the prior week's low, right? Prior week's low is swept here. What do we get? We get expansion here. Ultimately, price fails to run liquidity above the high. What does that tell us, or what can that tell us? That can be a sign of weakness, right? It's a sign, certainly for me, that the buyers aren't stepping in with enough conviction and that price is ultimately searching for price lower down, price or acceptance lower down, sorry. So, failure to run the highs, yeah, we see here, unswept, 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 all providing a huge liquidity target for price at some point because there's an expectance that there's all these stops above here and ultimately a juicy target for price to be run up to and look for possible reversals. So price comes back down. What are we doing? Taking out liquidity below the lows. We come down to here, take out all this liquidity. Price has a small recovery. Yeah. See, it comes up to here, runs the high, sustains, open, runs the high before getting the rejection. Now, this is where our levels can come in as well. And let me just make this line a bit thicker for you. So this level is really key for me because it's what's capping price. If I was to have to pick with a gun against my head the level on the upside that's capping price, I would say this. Okay, so this low, price couldn't close below it here, failed to close below it here, failed to close below it here, here. Ultimately, when it did here, you see the high body there, that's where the trading volume is in the body of the candle, pushes below, price comes up, fails to close above, sells off lower. However, what have we just been discussing and studying, right? We've got the liquidity sat below here, sat below here. When this is swept here, price comes up. It's now purged liquidity below the prior week's low, and we've seen a bullish reaction. So if we're higher time frame traders, what's really of interest for me here, let me just see if I can highlight that. What's really of interest for me here is reclaiming this level, because we can see here how well it acted as support. Is it going to provide the same challenge in terms of resistance? Oh, Craig, brilliant. Call finished early for once. Fantastic news, mate. So very simply, looking at how price is moving, where we're expecting reaction from price, and then we want to decant down lower, right? And then ultimately, we can find out where and what we want to see in terms of patterns and elements that we can interact with, right? Now, I'm going to delete this stuff here off the higher time frame because basically it's just going to become incredibly messy, because I want to focus on some stuff, some tangible stuff that we can look at, right? I want to do this on lower time frames so we can sit down and we can have an open and honest discussion weekly when we revisit this as to what's happened with price, yeah? Rather than kind of post going back through setups and bits and pieces that we've had, which is all well and good. I want to kind of share a lot more real-time stuff with you about trades that I'm taking, methods that I'm using, right? So that way we can all see what's effective, what's not effective, and hopefully people kind of get a little bit of insight into the, you know, the days and the routines of trading for a living. So, does anybody have any questions on that in terms of the weekly or what we're looking to overlay, or what I'm looking to overlay? Sorry, when I'm looking at the market. If you do, guys and girls, just obviously please feel free to just drop anything in the chat. And also as well, because I've had this a few times, when I say guys, for me, it's very much a unisex term. I include women and men in that as well. Certainly don't want to disclude any of our fine female traders, of which there are some really exceptional ones in the market. So let's look at where we are. Market structure. Remember, this is how we started on the weekly. All right. So we're looking here and we're saying to ourselves, okay, we can see here that the trend is down. Yeah. High to low, lower high, lower low, lower high, right? Now we've come into this area down here. This is of interest, right? Because we've taken out this short-term high. We've done something that I absolutely love to see at the base of any kind of potential reversal, right? Which is we've taken out liquidity below the lows. And very importantly, for me, right, is this. Equal lows, right? Or certainly relative equal lows. I'm going to draw that back to here so that we can see that that was swept. Now, the reason, thank you, Tammy, glad you guys get it. So one of the reasons that we look at things like equal lows is because there's an expectation that it's almost like an engineered liquidity, right? That something stopped the market there once, something stopped the market there again. Ultimately, if price can be driven down below that, there's almost an expectation from the market that that level has then been lost, so it could be flipped. Again, a great way to trap traders on the wrong side of this. Yeah, if we just move this line across a little bit, we can see on a daily scale how this weekly level was closed below, right? Encourage a lot of shorts, triggered a lot of algorithms, right? Took out a lot of stop losses below these lows. The very next candle, we can see the recovery, the close back above this level. Then what happens on a bullish day? We want to see price open, trade down into a discount, and then ultimately expand higher. What happens? Price opens, yeah, trades down into a discount. We get the expansion higher. Where to? This interim high, yeah? So once we know, or once we have a clear idea of where price is going, then we can start looking for entries and ways that we can get on board, okay? So one thing that I want us to focus on is what happened with this candle, all right, and how we could trade that, depending on, I'm going to take a look at kind of a 4-hour view, a 1-hour view, and all the way down to maybe sort of around about the 15 minutes. I know that most people don't have access to charts on a consistent enough basis to really trade the much lower time frames, which I do. I like kind of the 5 to 3 minute chart for entries, but this is a really, really good example of the fractal nature of price and how we can overlay it on different time frames. So with that in mind, as we've got here, now we want to kind of drop to a 4-hour chart, right? So what does this look like? Ultimately here, we can see this arrow signifies the candle close for which we're interested in, right? Remember, when you're looking at a higher time frame, moving down to a lower time frame, you need to make a consideration for the candle after the one you're looking at, because you're reliant on the close of that candle. Otherwise, what you end up doing is putting your trigger here or your point of interest here and saying, okay, well, I could have got into the trade here. Actually, you required the close, right, that came back within. And now we're looking for a retest and an entry in this space. So remember earlier, and just ignore this for a minute, guys. We'll come into this because this is my current thinking. So I wanted to keep that on you so you guys know that it's there. Remember what we said earlier in terms of inverse fair value gaps or inverse order blocks, right? Again, looking for something that has become resistance to become support, or something that's support to become resistance. So, first of all, when price broke down here, a daily fair value gap, again, notice how we're not getting the bodies, can't close above this, right? Price is contained in here. What happens? We deviate this, yeah? So even within here, you could say this is your accumulation, this is your manipulation or your deviation, and then price expands lower, all right? Or distributes. So that held. Remember what we said though, right? If that hadn't held, price had closed above, we look for a retest of this area, and then we want to trade it into the next available liquidity, which would be these relative equal highs here. So that didn't happen. Price did break down, and the fair value gap provided us with the opportunity for price to do exactly that. In fact, within that fair value gap, when we had the purge on liquidity here, we noticed that within here, it provided another fair value gap again that we can see acted as our resistance on the lower time frame, gave us the opportunity to get into trades. So why is that of significance here? Well, firstly, we had this, right? So when this fair value gap was set on the close of this candle, so from this candle here, the premise is that if price is going to move lower, we want to see price move into this area, yeah, reject here, break down the lower time frames. Our initial target's the liquidity below these lows, and then we would zoom out to find levels lower down. Now, what immediately became of interest here was the fact, and there's only a small overlap here, but enough of one, that we then kind of violated that by creating this. And I'm just going to do this a little bit darker. So our bearish fair value gap had a bullish fair value gap created as price came into it, right? Now, that in itself there might not be enough to take an entry from. Why? Because we could still expect a rejection within here, yeah? But what it does allow us to do is monitor when price comes down here for a bullish reaction. And then also, if we then look at this fair value gap here, we can see what happened here. The impulse move as price went up, it's now no longer respecting this gap. So what this can tell us is we've had a bullish reaction from this here. This has basically become an inverse fair value gap, and we can look to this area within here to find our triggers for price to move up to liquidity resting higher. Okay, so let me just clean this up, and we'll leave those ones on there because, like I say, we'll drop down on the time frames to see how this kind of translates into getting any entries into the market. Now, whether you're someone that wants a low time frame structure to dictate, or whether you're looking for candles, candle patterns, for example, then the key thing is that you're monitoring these areas, right? When price comes into here, you very cleanly know, for this example, where are you wrong? You're wrong if price gets above here, yeah? Price can come up, meander above here a little bit, but ultimately if you enter a position here, for whatever reason, whatever your entry techniques are, then if price comes up above here, this is where I'd have my stop. Yes, it is again going with the traditional convention of putting your stop above a high or a low. But if my theory is correct, yeah, and there's something within here suppressing price, yeah, be it this or be the order blocks in here, be it the fact that basically the price just doesn't have the buyers behind it to get higher, if there is enough momentum to drive it up to here, then my trade theory is wrong. In which case, that's why I have my stop loss in place to manage my risk. However, if I enter the position in here, I've got clear downside targets here. Remember, we've got our equal lows. So all I then need to work out, and this is very, very important, all right, is if I'm taking this position here, my stop wants to always be a few pips above the high or low, and then this is my initial target, yeah, are these equal lows, I need to make sure that the risk to reward makes sense for my system. All right. If I have a higher probability system, right, in terms of if my win rate is slightly higher, then you can afford to accept lower risk to reward trades because your win rate is higher. However, obviously, if you have a lower win rate, then you need to have an expectation for a higher risk to reward. Yeah. So we've got some really fantastic resources, both paid and free, available on the web in terms of risk to reward. So I do really, really suggest checking that out. I mentioned this in the workshop that I gave in Berlin, but the great Larry Williams, one of the most legendary traders of all time, multiple winner of the Robbins Cup, and I think by the highest percentage margin by a long way as well. When they said you must be so in tune with the markets, you must just be such an exceptional trader. He said, actually, I'm a very average trader, but I am an exceptionally good risk and money manager, right? Meaning that those people in the industry, certainly professional that I've come across, people with good risk and money management will outperform exceptional traders consistently because it's about building wealth over time. All right. So flip reverse, what happens? We come up to here. Sorry if you guys can hear any noise, by the way. Unfortunately, we've got some works going on outside for some new fiber optics. If that gets too annoying, guys, let me know. I'll see if I can shut up some of the windows or something to keep that down. So, similar situation here. This is our fair value gap, right? Price comes up. We now remember this was the bearish fair value gap here. We've now seen that violated with price going into here. So when we see price come down, we might not be able to get our entries there, right? Maybe we do if we take a higher risk, higher reward. And what I mean by that is if we're entering into a long position here, we know we're wrong below here, yeah? But ultimately we have a big upside here. Right, guys, give me 1 second. Let me just shut this door. Sorry about that, guys. We're back. Hopefully that's reduced the noise a little bit. So you can either take a high risk, high reward because you know where you're wrong. It's called a trade based on invalidation. Yeah, you're wrong below here. So if that's not your strategy and you want confirmation, then what we need to understand is we have to know what's going to happen here. And if this is our line in the sand, if we're saying, okay, price comes up, low, meanders here, sets a higher, higher low, the break of this, yeah, the break of this signifies that we're now favoring upside movements, right? Because we've got our break in market structure and we've got our predefined level that we expect price to reach for. So close above this level, yeah, as we see that we get here, we've got momentum on our side, we've got trend on our side. So we can look into this area here if we do want to trade on the low time frames. Yeah, so remember, we need the close first, and then we have the opportunity to enter here. Right. Now, we're going to have to move to a lower time frame here in order to see market structure shifts, okay? But remember, with price being fractal, this could be you moving down from a daily to an hourly or something of a similar nature to that. Let's just wait for TradingView to load up. Just going to take a sip of water. Guys, if you've got any questions from any of this as well, please don't hesitate to throw them in the channel. Right, so here we go. So we see where we've got our arrow. And remember, like I said on the high time frame charts, in terms of what it is that I'm looking for, I'm looking for how price is moving, yeah? I want to see high energy moves. Remember what I said about inverse fair value gaps as well and order blocks, yeah? And also breakers. So this is now where I'm going to start piecing this all together for you, because this is really what we're looking for. We've got the higher time frame view. We expect price to be heading higher. Why? Because we've waited for confirmation. We've looked for our key points of interest to be interacted with, our fair value gaps to be inversed, price to be dipping into then our bullish fair value gap, and we get this positive reaction. So how do we overlay the same thing on this time frame? Well, we can see here, right? What was this? Bearish fair value gap, yeah, closed above with a bullish fair value gap. This then becomes our base that we expect price to build on. Now, our higher time frame confluence is that we wanted to close above this level, right? Which we got here. Price closed above this level, comes back into here. Let's do this one in red. So this would be our breaker line, meaning this is the line that price came up to set the high. We get the low, a close above here would allow us to enter a long position on the close of this candle, even on a market entry. We know where our risk is, right? Our risk is a few pips below this swing low. Yeah. And then we know where our target is because we've got a clean liquidity target from our higher time frame. All of a sudden, we've stepped into a higher probability trade that's trading with the trend, that has high time frame analysis for price points and targets, with a low time frame execution, yeah, that's based on really, really simple methodology. Now, we can obviously include other things in this as well, yeah. So I don't know if I really cover this with you guys a lot, but breakers, for example, yeah. So what you would be doing in here is we would be looking for the last up move before the purge on liquidity down here. So we see this. These are the kind of moves you really want to see, right? Why? Because we have got underneath here all of this resting liquidity. Yeah. Have I got a little X or something? Let me have a look. Yeah, there we go. So let's flick that on. And let's do this so it's nice and clear for everyone, right? So liquidity, 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 right? Now, that one hasn't run that hasn't run that. That's the premise. And there's also this one down here as well, right? So let's make sure that's not left off. So down here, when you see a big violent move like this very, very similar to stop hunting, right, is attacking all the liquidity resting below here. Stop loss triggered, stop loss triggered, stop loss triggered, stop loss triggered. It will also trigger algorithms and breakout traders into heading in that direction as well. Ultimately, large accounts can then basically move the market in the direction they want, or what the market thinks it's going to go, to generate that liquidity, which then gets bought up so aggressively. Look, this is how quickly that dipped into here. All those huge buy orders got felt. Then what happened? All the people that believed that the market was going long here have now been stopped out. A lot of them switched to going short because they thought, okay, I was incorrect and going the other direction. Then they get wiped out again with a move that's so quick and violent. Yeah, it doesn't give people the opportunity to get back on board, right? So when you're looking for these liquidity sweeps, you want to see these fast, aggressive moves that then get recovered pretty quickly. We then form this base for which we're looking for price to build. We have our high time frame level here because we don't want to get caught in a deviation. So we don't allow ourselves to, because we mark the high that was set on the breakout. Now, the premise is, look, if this is a deviation, yeah, like look at this, for example, this move deviates. If this was our low, deviates, recovers quickly, right? It tells us that the likelihood is the price is going to travel to the other side of the range or the level. With this one, high energy move through, yeah, you don't see that huge upside wick showing the pressure to sell back down. All we do is we mark the highest high and we say to ourselves, look, if price is going to show strength here, then we expect it to close back above this high. If it doesn't, yeah, and it ultimately breaks down from here and retests this level, then the likelihood, from my perspective, is that price is going to break down a bit lower. Okay, so with that in mind, let's take a very quick look at current price action. Let's see where we are and let's put this into real terms for what we're looking at. So this is what I was marking up last night. I mean, this was all available in the free Bitcoin report as well that we release daily, which is written by different traders, right? So it's different traders' perspectives on the market. I release mine on a Sunday, which I really like because it's when I sit down and I do my big market overview before traditional markets open on the Monday. So what are my thoughts and feelings here? We can see that we've got the fair value gap here on the H4 chart, right? So the 4 hour. Now, price has moved up from here, yeah, created the fair value gap, now drawn back down into this. So I'm asking myself the question, as we discussed last time, what is holding price, yeah? So this down candle, before this move higher, we see we've retested it here, we've retested it again here, and each time we've dipped into this level, price has got bought up. Now, longing from here would be risky, right? So when we look again at market structure and we abide by what's on the hourly, yeah, higher highs, higher lows, higher highs, higher high, lower low, lower high, right? So if we see price break down below this, for me, I've immediately got a trigger plan. If price gets below this, retest this, then on the lower time frames, I want to see the confirmation of that break of market structure, and then we can very simply target prices lower down. Yeah. However, this fair value gap up here, there's an expectation, being a bearish fair value gap, that price is going to get drawn into here and then break down. Again, if we get that and on the lower time frame we get our break of structure, then we can aim for here, look for resting liquidity below the lows that we have here and here, right? So it's important that we want to make sure that our trade plan allows for our internal liquidity, not just, ambitious targets that are further on. But we could take a high probability short setup there. Now, in terms of being long here, then what we want to see is this turn to support. Yeah. So on the same premise, I'd want to see quite a quick aggressive move through this, a retest of it, lower time frame, market structure shift. We can look for our entry triggers. And again, we're just targeting, forget that last bit, we're just targeting liquidity above this resting high. Okay. So that's what I'd be looking at, and that's what I am looking at today with this. All right. So does anyone have a chart they would particularly like me to look at? And just to finish off the session, we can take a top-down look on that and see how we'd be looking to approach it. If not, I can take a look at ETH, or we can take a look at traditional market assets as well. But just in case anybody had kind of a chart in their mind that maybe they were looking at, there we go, ARB. No problemo. in there swiftly with that. Right. Also, guys, as well, in terms of this, we're not going to do this today, but Wednesday we reserve our alt review session. So if you guys have got any alts, or if you've got anything maybe that you're playing out your system on at the moment that you want us to take a look at on a Wednesday, please do let me know, and we can make that part of the stream on Wednesday. So let me just have a look. I saw, here we go. Rick, really good question. So basically, I was fortunate enough to be part of ICT's original mentorship. So I learned a lot from that. I took a lot from Trader SZ as well, and they have, although they conceptualize it and approach it differently, there's a lot of similarities in that. Looking for market inefficiencies, liquidity, right? The idea is that the price is getting. Price is always on this search for liquidity, right? And the big major players control these markets to a certain degree. Also, it's the understanding of the control algorithms and banking systems and that can allow us to search for certain price signatures in price, certain signatures within price. Sorry. So for me, order blocks, fair value gaps, breakers. I'm not as heavily kind of on the breaker front, to be honest, although it has been, really, really handy in crypto recently. And then it's the use of those fair value gaps. Also, principles like premium and discount, right, which are really, really big to how I trade. So let me take a look at that for you, and let me overlay this, and I'll show you in terms of my thinking on it what the kind of importance is. All right. Let's have a look. Right. So just highlight all of this, and then we'll save that as some data. Awesome. So we can see here, I know this is the Bybit chart. That's who I trade futures with in terms of centralized exchanges. So first of all, and I know this is a very high time frame approach, for me, I always go through the same approach, right? So start on the weekly. What's capping the market? And I think we can see here that this is the real kind of key pivot point, if you want to call it that. Support, 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 support. Big move through it. Yeah. Now what we've got on a weekly scale here is we can see we've run the prior week's low here, and we did get that kind of bullish reaction pushing higher. Kind of internally, our target would be the previous week's high, or the prior week's high. So let's just make them slightly thinner, so they signify sweeps. Now we can see here as well what's drawing price higher is the weekly fair value gap. All right, so now as we drop down to a daily, you see how clean it is on the weekly, and then once you get into this level, you start to see these deviations, right? Price deviates, comes back within, but again, fails to get any higher. Retest this level. We have the impulse move higher that unfortunately and ultimately fails. But once again, even if we were to get on the wrong side of this, yeah? And if we're looking at this on a daily scale, then really, look, we've got our lower low, lower high, higher low, yeah? Close above this level would have us bullish. However, we don't just want to blindly run into it. Why not? Because we're always looking for what can be capping price on the other side. We have this inefficiency here. Price has run up into this, as we can see, and then it's had a bearish reaction. Now, how would we have known what to do, or what would have given us our opportunity to trade this? Yeah. Let's draw this across because we can see the real significance of the overlapping order blocks here. A lot of indecision in the price action here. So as price came into here, we would have been looking for long setups in here. When price violated that, we're then saying, okay, where could price then be looking to rebalance before moving up? Here, yeah? So ultimately, we're then looking in there for long setups. When we get that, we're targeting liquidity above this high, right? We would then decant down to a lower time frame to see if there's any reason as to why price would stop here. Most of the time, it's due to order blocks, yeah? So we would find a lower time frame order block in here. And then what that becomes is that becomes our target for price, because then if price does overcome that and looks to move higher, we're simply searching out the liquidity that rests above. So price came into there, that gave us our long setups. Why our long setups? Because let's not forget market structure, high, higher low, higher high. Our assumption is that this is now causing the higher low that's then going to push up, yeah, to continue the bullish market structure. So what can help us be aware of that? Well, is this bullish fair value gap, bearish fair value gap through it, right? So if we were going to get more downside, we would expect price to do so from here. So we can still trade long on a lower time frame into here. Yeah? Because look, from the bottom of that, even to halfway into this move, is 5.6%. You really do not need that amount. That's a huge, huge amount in terms of looking to break that down into day trades or even into shorter term swing trades as well. So we get the expansion above, right, which is great, allows us to hold the trade. We're then looking for targets within here. We're then interested in this fair value gap that exists here. Because we want to see this hold. Ultimately, price rips through this. Then what have we done here? We've just simply shifted market structure. Bullish market structure, higher low, lower high, right? So when we lose this low here, let me just clean some of this up so it's not so obtrusive. Yeah. So when we close below that low here and we see this reaction from this key kind of pivot, this SR level, if you like, price then comes back into here. If price fails to overcome this and move higher, we're looking for our breakdowns in here. Yeah. Price comes in, we see the bearish reaction, we look for breakdowns on the lower time frame. Where are we targeting? Quite simply, liquidity resting below this low. We can see again we had that big move through it. So where does that leave us now without looking and focusing too much on post data? Yeah. This fair value gap. So let's actually label this one up. So FVGD, fair value gap daily. Now, let's tell our story of price. Price has run these lows, right? Ultimately taking out liquidity below key lows. So now we're looking for price to react. Yeah, it swept the prior week's low. We see the reaction by the long downside tail wicks here. So we're saying we're looking for a corrective move in price, but ultimately we're still bearish, right? We're still bearish because the market structure is still lower lows and lower highs, right? So that's the ultimate thing in our mind. We're saying let's always respect market structure. And if you struggle with stuff like that, you can use tools such as BPro, all right, which in this particular instance, I've got like the divergences on, which you can see here, a really handy feature to find out when price and momentum disagree. It gives us some opportunities, but you can also use it for what's known as the trailer. Yeah, so as a trend system and one that someone like CryptoBurb uses immensely effectively, right? What it does is it helps you to understand the high time frame trend. Yeah. So it's meaning that from here all the way down, you're just short bias, right? Which is what you want to be in those conditions. However, you can still work that out from a price action trading perspective by looking at market structure. Okay. So what does this mean? Does it mean that I wouldn't go long here? Not at all, because we're expecting price to come to a specific area in order to rebalance. So we can look in here for potential long setups based on the sweep of liquidity. Liquidity gets swept, we switch down onto a lower time frame, and we can play some counter trend scalps, right? Definitely didn't mean to put that on the 1 minute, so ignore that. We want this to be on the hourly, right? So daily, the theory was this, right? We're going to get a reaction from here. There's an expectation that price is going to push up to search liquidity above this high. Yeah. Notice how when we drop down to a lower time frame, all of this noise. Yeah. Now that's fine, but the higher time frame, we zoom back out to the daily, gives us really nice clean context, right? All of a sudden, we look at the master trend, which we know is down. We see price consistently doing the same thing, right? Getting lower, creating a fair value gap, either rebalancing or violating. Yeah. In this case, inversing. Bullish fair value gap, price is lost, retests it as resistance. Brilliant. So now our theory switches to this daily fair value gap. Price is either going to be drawn into this level here to correct deeper, or we'll ultimately reclaim this and then we can move our bias to bullish. However, by dropping down to the lower time frames, we can say to ourselves, okay, well, if we expect when price is down here, if we expect price to come up for this high or at least somewhere near it, then what we want to do is overlay the same principles. We're looking for sweeps. Liquidity has been taken on a high time frame below here. Here's our low time frame sweep of liquidity. Here's our internal shift, which means that that's our market structure shift. Yeah. Ultimately, we can look to take out this high here. And then, very simply, all we're doing is we're then looking to find an entry to trade price up, initially to this, which is our internal liquidity, or to this. Now, if we want more of a confirmation-based entry, remember, like we were talking about in terms of our overlaying fair value gaps, yeah, we can see this fair value gap in here, which is a bearish fair value gap. Now, let me just zoom in so you guys can see this clearly. So this is the fair value gap on the manipulation leg or the displacement leg lower, right? That means that ultimately this was the move on liquidity before price recovered. That would be an area that we'd be targeting for resistance. Price cut through that, leaving this fair value gap in its wake. The retest of this then allows us to trade that up to liquidity higher up. Ultimately, we can see how this held really well down here, giving us the conviction to trade it higher. Okay, so in terms of entries, however you're looking at this, whether you're looking to take market structure shifts early, you can enter on the close above these breaker lines. Just for example, this breaker line here, if we entered on the close of this candle, our entry would be there. Our stops are a few pips below the swing low, which is here. And our internal range target would be this. Yeah. Ultimately reaching for this high here. Now, again, we can monitor this as price goes along. As we start to lose structure, as we've done over here, now we're saying to ourselves, okay, from a trade management perspective, if we were in this trade, let's look how this is all getting defended by these order blocks. Yeah. So see the down close candles, price comes up, comes down. Yeah. Finds support off the consolidation before the expansion. Yeah. This is the consolidation here before the expansion here. So is price currently being held in this, even if we allow for that, or depends, you can allow for the one candle here. So now we're saying, okay, well, if price is holding this, here's our high, right? Low, lower high, higher low, yeah, higher high. Take out of this high, we've stepped into a lower time frame bullish structure now. So again, I'm not suggesting you do this, but for me, I'd be saying, okay, well, here's my internal liquidity target. Yeah, there's my main target here. Let's say price comes up, and this is going to look quite funny me trying to draw this in with a pen, I know, but let's say comes up to here, we get that close above. Yeah. then all of a sudden we can say, okay, well, our conviction is if we're closing above here and we're placing below the swing low here and we're targeting here, unfortunately for me, the risk to reward just isn't really there at that level. 0.87, I wouldn't really want to be taking anything below 1.3, 1.4. And we can see we get our 1.4 here, but we would definitely have to be aware of this. Yeah. Alternatively, what we can do is move to an even lower time frame and allow ourselves even more conviction in this setup, which would be to see the inverse of this FVG here, this fair value gap. Price gets drawn through this. On the lower time frames, we can then say, okay, we're finding support here. Here's the break. Target 1, target 2. Okay, guys. Look, I really, really hope that's been interesting. I'm sorry that we didn't get a chance to look at any other charts today. We obviously will make time for this on our alt request Wednesday. So I know Michael, apologies, came in asking for ETH BTC and BTC dominance. Definitely make time to look at them for you on Wednesday when we cover our alt section. The same with data USDT as well, Papa Legba. Obviously, if you guys have any really, really pressing issues, you can reach out to me at the Nest. You can also reach out to me on Twitter as well under BC_Richfield. Do remember, guys, we've got some great deals going on at the Nest at the moment. If it is something you're interested in, you can come and trade with us. You can come and take up a 7-day free trial, learn what the community is about. You can get access to our professional trading calls for free just by partnering with our guys at Bybit. And we have a brilliant decentralized exchange partner in Apex as well, for which we've got some great education material on that, which can kind of take that. Michael, brilliant to hear you're going to be back on Wednesday, mate. Really appreciate that. Papa Legba as well. Rick, Craig, Mhem as well on from earlier. Tammy as well. Crypto 101. Whack. I know you were on there as well earlier. Great to see you. Nip Har as well. Burned as well from earlier. Look, I think the noise is just about to really start kicking up here, so I think it's a good time to put a pin in it. But let's see how this develops today. Yeah, let's see if we get these kind of moves up. Certainly what I'm watching, something very, very similar. To just close off for you guys as well when we're looking at Bitcoin. I mean, obviously we know as well that BTC is going to be the main catalyst for these assets to move as well. So when we look at the chart here, we'll just have a very quick and very brief touch upon that to just see where we are. Whack, yeah, awesome, buddy. Hope you have a great week as too. You same it as well, Burned. Let's give it 2 seconds for it to catch up. The heat in the UK is giving a little bit of issue to the systems at the moment. But look, same as we have here, right, as we discussed, price was getting driven into here. If this order block is holding us support, we've got a low, we've got a high, we've now got a lower high, break of these highs, flip of this, yeah, from resistance to support, and I think we're going to push up higher. All right, guys, thanks so much for joining the stream. I'm going to be back here on Wednesday. We're going to look at all your alt requests then. If you've got anything else that you want to see on the show, please do let me know. Apart from that, have a fantastic start to the week, and I look forward to seeing you around the Nest.